Have you ever marked out a perfect supply and demand setup? You've been waiting patiently, price finally enters you in, and boom, the entire thing reverses on you and you get stopped out immediately. Now you're not alone, that's why today we're gonna go through exactly how you can reduce the fake out so that way you can stop getting trapped in trades that you don't need to be in. If you're new to the channel, my name is Sully. I'm also a day trader like you are. I trade one time frame, I keep it extremely simple, and I've made over 6 figures now day trading, and I'm gonna show you exactly how you can have a simple system so that way when you do enter trades as well, you just follow different criteria to know exactly what's gonna probably fake you out and what isn't gonna fake you out as much. Now fake out is unavoidable, we do know that, but at least you can reduce the percentage so the trades you take you are confident in. So we can see this trade right here. This is a supply setup. Prices enter the zone, now we're waiting to take a sell position. So at this point in time, I'll be looking for shorts right here, stop loss right above this candle, and you can see on the next candle we do get entered into this trade. So at this point now, I'm in this trade, right? I'm in this trade. Price moved down slightly, but eventually price decides to go up and shoot, take us out pretty quickly, right? You only had a small, profit, and then afterwards you were pretty much in drawdown the whole time. This is what a fake out is. And the worst part is you will see that eventually price does decide to continue to go in your direction, which is the worst. So let's go into how do we avoid fake outs. And I'm going to show you guys several trades and different examples that's going to help you. So first of all, you can see this trade. This trade is a trade I took literally today on the 8th of July. This is a trade. First of all, one thing you want to know is you want to make sure you're taking fresh zones at all times when possible. In this case, you will see right here that there is for example, a demand zone right here. There's also another low probability one that happened earlier. This was also a fresh zone, but in this case, there is this zone here that's not tapped into. Sometimes there'll be more even close by. You want to realistically just take the fresh ones, the most recent ones, because price tends to react to those first, and then eventually when it gets to this old one here, what's going on is completely different. Price action is completely different. So I'm not going to be waiting for this low one here so I can catch, a 1 to 16 or something to catch the whole move. Because by the time price gets here, price could be forming lower lows at that point, and it might be a whole complete different direction. So the trade I took today was this trade right here. It's the most recent zone. There's no other zone coming up, and just took a quick scalp. Boom, boom, boom. Eventually I exited right there, and you'll see, wait, hold on. And from here, you will now see price forms another high. We broke this high. So now this is another fresh zone, right? We have another fresh zone right here. So from this fresh zone, you want to just go for the fresh one. Eventually, you're going to be looking for buys right here. Price decides to come in that zone again, and boom, 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 boom. Price continues going up. So you want to make sure that you are taking fresh zones where possible. This alone is going to make a big difference. All right, let's take a quick break so I can tell you about a prop firm that you want to check out on your next challenge. So if you're a trader and you're looking to grow, but you're having issues with simulated capital so you can actually make more than you currently are, then listen up, that's going to be important to you. Now there's a prop firm known as Funded Trading Plus. I've been looking into them recently. They're actually pretty decent, and they do offer some conditions that I think would be very, very appealing to most people who trade. There's no fluff, there's no rubbish. They provide you with a simulated trading environment, and if you're capable and you have what it takes, then using this simulated environment, you can actually trade and you're able to get rewarded based on your performance. Now, Funded Trading Plus isn't about having, unrealistic leverages or conditions that can't be replicated in actual trading conditions. So if you are serious, then you want to be trading like an actual, proper serious trader, not here to be swinging $1 to $10,000 sort of thing. With Funded Trading Plus, they provide you with a range of evaluation that you can use. Phase 1, phase 2, instant funding, pretty much anything that you're looking for, they do have. So just pick one that suits your psychology, that suits how you trade, and you can have the confidence that once you do pass and get funded, they will also provide you with a withdrawal. These payouts happen weekly, and they do provide 24/7 customer service, so you have that peace of mind that they will help you if there are any issues that actually come up. So as long as you're willing to put in the work and you are serious, there will be a link in the description below. I have got you guys 10% off. Use the code Sully for your next challenge, and I wish you all the best. Remember, there'll be a link in the description. Now back to the video. Now secondly, you want to avoid the mitigated zones. These are zones that's already been tapped into. I'm going to show you an example. Okay, so let's look at this trade right here. This is another demand trade. You can see price tapped into it. Price was already played out. You would have left, 1-to-1 or whatever the case is in this trade. This is a trade that's already happened, and you would have made your money and call it a day, right? Whatever way you went about it. Now, price does return back into this trade. You will see price does come back again. Momentum slow down. It gave you another entry. You would have put your stop loss here again, but in this case, it's slightly different. Price didn't really move like that. It didn't even get to 101. So keep an eye out for this. It's super important. When price has already tapped into a zone, don't go and take that same zone again, because think about it this way. The buyers waiting there, they've already bought and they've left. If price goes back again, realistically now there's less buyers waiting there to buy and then move up again. So in this case, you want to make sure you're looking for fresh zones and ones that have never not been tapped into at all. So that way, when that momentum happens, you can easily and quickly make your scalp, make your money and cut. So everyone else going after you, they're realistically not going to, make as much money as you. Now, the next thing, which is one of the most important, is every zone you're taking needs a fair value gap. This is essential because this is what shows you a high probability setup compared to a low probability setup. So again, if we're looking at this exact same trade that happened before, this trade right here, before it even happened, there was a clean, clear fair value gap present. The fair value gap is from here all the way to here. If you don't know what fair value gap is, I have made a video on fair value gaps. Check the channel, you'll see it, and an in-depth video on fair value gaps. But this is the fair value gap right here, close to the zone, attached to the zone. So right here, this is a demand that is less likely to pump fake you. This is a zone that you want to be taken. When it's a low probability setup, it is slightly different. You tend to be pump faked more. I'm not saying it will never win. I'm not saying every trade that has a fair value gap will also always win. That's not the case. But remember, the aim of this is to reduce those pump fakes, those fake outs. So based on this trade, you'll see eventually price taps in, holds, and then boom, goes up. Simple. So these are the things you want to be looking for. So those three that I've already mentioned is one thing. So this is just to do with avoiding poor setups, poor zones that just aren't the best. So now we're going to move into waiting for confirmation now. This is the next thing that's going to help you to avoid those fake outs. So when it comes to waiting for confirmation, there's also a few things that you can do. Number one is using the high time frame and then waiting for a low time frame to enter. When I mean high, I don't mean going to like the daily and stuff. I don't personally trade that way. But in this case, this is a 5 minute. You will see price action is clean. Price taps into the 5 minute. And at this point, what you can then do is go to the usual time frame that you trade. So I can go down to the 3 minute now and I can get a better entry in this case. So I can enter right there. Or even if I wanted to go down to the 2 minute, then you will see the exact same thing. Then I can go for a 1 to 2. In this case, let price play out, and eventually, do we hear? Okay, so price eventually goes back to break even before hitting the 1 or 2. But either way, you could have left either at this demand zone. I have made a video on that as well. But the whole point is, once you are using a higher time frame, it gives you more confidence, number one. Number two, you have multiple time frames that are stacking. So I'm guessing in this case, let's look at the 1 minute. So the 1 minute is also present and price did tap into it. So if you entered on the 1 minute now, you'd have got an even better entry. So you'd have entered right here on the 1 minute, or you could have entered on the 2 minute if you traded 2 minutes. So different ways of entry, but you're using that high time frame. So you can use like the 5, you can use the 15 and then enter on the 3, the 2 or the 1 minute. Those are things that I would do, or sometimes using the 15 minute and then enter on the 5 minute. The stronger and the higher the time frame, generally, the stronger the zone. So this helps you to get that momentum straight to TP. So it doesn't play around as much, doesn't fake you out as much. So do keep an eye on sometimes these high time frame setups and then enter on the usual time frame that you use. And using the same trade as an example, that takes us to the next, which is waiting for a break of candle or some kind of confirmation. For me, I do like that BOC. It's nice and simple. So in this case, you will see that price taps into the zone, right? And now I don't just enter immediately. If you want to avoid unnecessary losses, then you want to kind of stay away from aggressive entries. They might win sometimes and you get like a 1 to 2, 1 to 3, 1 to 4. But when it loses, you're just going to lose without any confirmation of entry. And it's like the silliest loss to take. In this case, I'm waiting for that break. So the break happens here. You can see this next candle went past the previous candle, and now I will just be waiting for price to hit TP, whatever that TP is. In this case, price got into this demand zone, so you could have easily left at the demand zone, taking your 1-to-1 and voila. But I wouldn't enter aggressively, because if you enter aggressively, then you can lose at many points before price even gets there. So those are a handful of things that should help you reduce your losses. But if you have been burned by fake outs before, then you want to watch this next video on fair value gaps. This is going to be a big changer that also helps you to reduce your losses, but will also help you to add to those wins and taking the best setups that you see.